My experience, and then we'll go to Q&A and wrap up. I've said this before. Passion, focus, and team. Passion, focus, and team. If you have the passion, that's about 80% of the people I talk to. Do you have the focus? That's about 20%. Hate to tell you, but only about 20% of you in the room have the focus that I'm looking for. Unfortunately, 5% have the team. If I went around today and looked at every deal you wanted to pitch me, only about 5% of you are going to have the team or the idea of the team that I would stroke a check for. Good news? Want to hear good news? We're going to talk about building your team tomorrow. Is that good? Get you on the road to building your team. 90 to 100 days to stroke a check. So when do you ask for money? When you don't need it. A bank's great at giving you an umbrella on a sunny day. Angels aren't that much different. 90 to 100 days. I've never, ever, ever funded anything in less than 90 days. From the time somebody asked me about investing in their business to the time I wired the funds, never less than 90 days. Usually it's 90 to 100, 180. That's quick, actually. I know a lot of groups where it's 9 months to 12 months from the day you meet them to the day they're funding. So when do you need money? When do you ask for money? We don't need it, okay? A lot of turtling out there. I call it turtling. I don't know if it's a term. I just came up with it. Everybody's pulling their arms, legs, heads, and everything else inside the shell. They're waiting until whatever's falling out of the sky quits falling. Then they'll put their head back out. Expected returns at an all-time high. All right? The rates I'm getting, the offers I'm getting, the terms I'm getting are like crazy terms from even 3 years ago. Intangible is much more attractive now. Much more difficult to sell an idea or a concept or some sort of an online service. Come and hand it to somebody, show it to them, let them play with it, let them touch it, let them feel it. Much more attractive right now. Anybody watch Shark Tank? Okay, Shark Tank, same thing, right? Bring in your prop, show them what the prop is. Okay? Angels looking for bank turndown letters. Okay, I've heard this over and over again. I haven't started doing it, but I think I might. So you come to me and you say, I want you to fund my business. I'm raising $1.2 million. You're my third investor. I've raised $300,000. I'd like you to write a $100,000 check. I'm going to say, that's great, but after the basics, I'm going to say, show me your bank turndown letter. What is a bank turndown letter? Just what it says. You went to the bank, you wanted to raise money, you went through all their due diligence, all the crap you got to go through the bank, and they said, sorry. Okay? Well, what did the bank do for me? All the homework. What do I do for a living? As little as possible. The bank did all my work. Okay, you're going to see this more and more. I haven't started doing this, but it's a great technique. New finance rules could hurt the future funding. Oh, I should have changed that. Those didn't happen. Thank heavens. So there were some finance rules that were coming out that didn't happen. All right, Q&A. Let me go to this real quick on the terms. Dave wanted me to talk about this. I'm going to give you my terms, and then you guys can ask questions. How does that sound? To whatever time we have left. So here's the deal. For me, typically, I'm looking for around 30% per year. That's the return. Okay, that's an equity deal. Sorry, equity. Okay, on a debt deal, if it's collateralized, I'm looking somewhere between 15 and 20%. That's collateralized. Non-collateralized, you're looking at 25 to 30, almost payday loan stuff. Well, not quite. Does everybody know what I'm talking about? Non-collateralized versus collateralized. So you're pledging an asset. Okay, so here, you've asked me to loan you $50,000. It's a debt deal. I'm loaning you $50,000 to your business. You pledge $50,000 in your house as equity against that. So it's collateralized. Non-collateralized, it's your good name. It's whatever you have going for you. You're selling me the sizzle. I'm looking at 25 to 30%. On the debt side, I also want a term insurance policy on the owner or owners 2 times the total. Why do you think I want that? This is life insurance, by the way. Life insurance. What is your business typically when you're looking to raise money? It's you. Heaven forbid you die, you get hit by a bus. What happens to my investment? It's gone. So I know I'm at least going to get 100% return. Okay, so I'm going to ask this. Okay, I'm going to require it. Term life insurance policy, 2 times the total. Okay, so as Dave was talking about the terms, you can get to the terms to a point where you're like, I'm not interested anymore, right? I mean, that's what can end up happening here. Okay, so this is a typical debt deal. Here's the percent I'm looking for, the term life deal I'm looking for. Typically, I'm going to want some sort of a put option something to that effect, if it might tie into some sort of a shares in your company. But some sort of a put option where I can say at the end of a year, okay, if you don't pay up, I have the right to either convert to some sort of an equity play, or I can put to you the price at any time to pay me off. So if you borrowed 50 grand from me and you came to the end of the year and you said, I can't pay the balloon note anymore, I say, okay, well, we're going to do this, we're going to convert it, we're going to change it, we're going to change the terms. Okay, so it's usually a 1-year balloon note on a debt deal. 1-year balloon. 1-year balloon on a debt deal. These are debt. Okay? Now, it can be rollable, it can be converted, you can transfer it, that sort of thing. On equity, this can get very complicated. Anybody ever raised money and sold equity in their company? Couple? Okay. This can get very complicated. This can be so complicated that it makes my head hurt. Okay? Typically, you're going to look at around 30% return a year, a 3-year, could be 5 years, but typically 3 years. 3 years to 5 years. And there's all kinds of preferential stuff here. So you could get into a non-diluted stock, meaning you can't dilute what you're giving me or what you're selling to me. I'm a big fan of founders stock or units. Okay? So I know Dave knows this. It's founders stock or units. Meaning if I'm gonna write a check to you to buy your units or stock in your business, I want your stock or units. I don't want the A, I don't want the B, I don't want Aunt Lucy, Cousin Vinny. I want the founder's stock or units. I want proof that you're selling me your stock or units. Okay? Your original founder stock or units. I mean, this can go on, and I know we're running out of time, but this can get very complicated. You can research this stuff. I would say this. If you put a deal together and you're hitting those 4 things, okay, and then some sort of a preferential, so if you say, hey, we're going to bring in somebody, I know, hey, Scott, you're a great guy, you put 100 grand, but we got somebody who's going to bring in $3 million in the second round, and we know you're non-diluted, but here's what we're willing to do, here's your preferential treatment, which could be a list of things, that's very attractive. And it's attractive because you know your audience, okay? For most of you, I wouldn't get this complicated. Keep it pretty simple. You guys watch Shark Tank, right? Some of you? So somebody goes in there, typical TV show, and they say, we want to raise $1 million to launch our barbecue sauce. I think that was one of them, actually, a barbecue sauce guy. Yeah, raising $1 million to raise our barbecue sauce, right? You're raising $1 million. Okay, that's great. How much of your company are you selling for $1 million? 30%. And again, back to being what David Francis talked about. Being absolutely clear on what you're doing. 30%. And they just kind of laughed at him, right? Hey, I'll tell you what, they come back and they say, look, you're raising $1 million, we'll give you $300,000 for 55%. Okay, and they went back and talked and back and forth. I don't remember the whole deal, but I think they ended up getting like $450,000 or something like that for like 52%. So they sold the majority of their company. But what did they get out of that? I mean, there was like a follow-up story on these people, and their barbecue sauce had gone from like $500,000 a year in sales to like $15 million a year in sales because their angel investor plugged them in networks and avenues they never could have got into. Right? So, I mean, you got to take it at all the different levels. The deals, the terms are not necessarily bad if it gets you access to other things you could never have gotten into. Or, more importantly, in my view of things, if it took you from 0 to 100 in half the time. Okay? What one thing do we all have in common in this room? Besides being entrepreneurs and idiots sometimes. 24 hours in a day. 24 hours in a day. I'm not going to do my life box. It's another great exercise I show people sometimes. But 24 hours in a day. If you can get here quicker, okay, what's that worth to you? It goes back to what we said earlier. All right? For some of you, you've got 50 years left. Some of you got 80 years left. Some of you have 10 years left. We don't know. Who knows? Some of us, it might be over tomorrow. Point is, in the terms, you've got to look at a lot of variables. Okay? Who's your investor? Who can they connect you with? What kind of resources do they have? What's their network? Are they going to be involved? Are they going to roll their sleeves up? There's a reason I roll my sleeves up at these events, by the way. Okay? Are they going to roll their sleeves up? Are they going to get involved? Or are they going to be a passive, total passive investor? Don't call me, leave me alone, send me my check. All right? You've got to take all that into consideration when looking at the terms. Does it make sense?